Central Europe's commercial real estate market is taking off. Hi, my name is Robert McLean. I've been covering the region's commercial property sectors for a couple of decades now. Today, I'll bring you up to date on the latest deals and stats for the Czech Republic and Poland. Who's buying, who's selling, what's hot? There's been a rush of deal activity in the last couple of weeks, so let's get going. We're going to begin with the macro numbers, though, because they frame everything else. Across the whole region, the 6 markets of Central and Eastern Europe, total commercial and real estate investment hit 5.8 billion euros in the first half of 2026. That's according to Colliers, who also note that while investors are clearly back, they're far more selective than they were before. Capital is flowing into assets with stable income, strong ESG credentials, and long-term competitive positioning. So the days of buying anything with a tenant and a yield are over. As usual, Poland led the region. According to CBRE, Polish CRE investment hit 3 billion euros in the first half of 2026. That was up 78% year on year, and the strongest first half since 2018. Retail led the way in Poland at just over 1 billion euros, or about a third of the total volume. That was followed by logistics at 782 million, residential at just over 600 million, and offices, less than residential, by about 8 million. It was a total of 594 million euros. And here's a number that'll come up again. Czech investors contributed 25% of that total volume. In the Czech Republic, first half investment broke through the 30 billion crown mark, with Q2 delivering a sharp rebound after a slower start. Most of that capital went into Prague, so the recovery is real on both sides of the borders. So let's get down to some of these deals. We will begin in the Czech Republic. And the first deal I have for you took place in Prague, where a brand new Czech retail fund just made a big entrance. This is the Aurelia fund, part of the Axelor group, which acquired 2 premium office buildings in Prague's Pankrác district. The first is Trimaran, which was built in 2018, and City Element, which was built in 2019. The sellers were Allianz and Pimco. The deal pushes fund assets to around 5 billion euros at this point. It's 28,000 square meters of office space at 100% occupancy, co-financed by CSOB and UniCredit. What makes this interesting is that Aurelia is a retail investor fund. They've got 4,700 individual investors. So this is Czech household capital flowing into institutional grade offices. Next up, we have a deal in which PPF Group sold Katerinska 40, which is an 8-floor, 7,000 square meter office building near Ipopema in central Prague. The buyer in this case is Conseq Investment Management, which has 208 billion crowns under management at this point. Knight Frank brokered the deal. It's a notable deal in that PPF has not been selling recently. It hasn't made any disposal in quite some time. Prague office now is below 6%, giving an indication that this may be a seller's market move. The next deal is an acquisition made by Creditas, which is part of Hubáček family's financial group. They've purchased Prosek Court from the J&T Real Estate group for over 1 billion crowns. Prosek Court is a 3-building office complex at the entrance to the Prosek Metro station on Line C. This is a project that just got its building permit in April this year after years of appeals. Creditas already operates next door, in fact. They launched an apartment building there in 2023 that has 85 rental units that are nearly full at this point. So they're consolidating a position in one of Prague 9's best connected transit nodes, and they're doing it with a 27 billion crown, 5,500 apartment pipeline behind them. Now, here's where it gets interesting. That same Axelor group I mentioned before that's behind the Aurelia fund in Prague, they're launching a Polish investment vehicle through Ipopema TFI, specifically to target Polish commercial real estate. Now, you remember I mentioned that 25% figure a little bit earlier. Czech investors already account for a quarter of all capital invested into the Polish market. Axelor is betting they can push that share even higher. So this is a structural play, not a one-off. Czech groups now have domestic platforms, strong currency, and a pipeline of Polish deals to pursue. They don't appear to be going one building and then home. They're setting up fund structures to deploy capital at scale. Which brings us to Polish deals. The first one I have for you in this case is a group that came from Hungary, actually, though, to buy, not from the Czech Republic. Appeninn is a Budapest-listed company. They've acquired a portfolio of 7 retail parks and 4 shopping centers across 11 Polish cities from Dekada, that's a Polish group, for over 100 million euros. That's roughly 53,000 square meters of gross leasable area. This is a major cross-border play, and it fits the pattern of CEE capital, which is staying within the region rather than flowing west. The next deal is a closed-end fund created by Ipopema TFI and NASA Capital, which together have bought the Jerozolimskia business office complex in Warsaw. This is their first purchase, and the fund is targeting Polish retail investors. So you're seeing the same dynamic as in the Prague example with Aurelia. Domestic capital getting organized into fund structures to buy commercial real estate. Moving on, in the past, anything with 4 walls, a roof, and a decent paint job could serve as office space, but the explosion of residential prices has killed that situation. We can see this in the next deal where Trimaran Real Estate acquired the Renaissance building on Plac Zbawiciela. This is really one of those wonderful mini locations in central Warsaw. It's a historic building originally built as an apartment complex back in 1902. Numbers-wise, it offers over 7,000 square meters of usable area, including 600 meters of ground floor retail. Bank Pekao financed the deal, apparently. Sirena, for what it's worth, is a Warsaw-based investor. They say they'll keep it as office for now, as well as the retail downstairs, but local planning does allow for a conversion. Finally, I can't do a Polish investment roundup without mentioning the Żabka deal. Canadian convenience giant Couche-Tard is acquiring Poland's Żabka chain for 32 billion Polish zloty. That's the largest retail M&A transaction in Polish history. Żabka has over 10,000 stores across Poland. This is not just a real estate deal in the traditional sense, but 10,000 store locations is a massive real estate footprint, and it signals global capital's growing confidence in Polish consumer markets. That's all I've got for today. Head to the Prime CZ for more in-depth coverage. Subscribe to the channel if you haven't already, and let me know in the comments what you'd like to hear more about. See you next time on the Prime Real Estate Market Update.